Alright, for this video I want to go over a sample earned income credit calculation for a single filing taxpayer in 2023. So in this example we've got Frank, taxpayer here. He is a single filing taxpayer, full-time resident of Florida. And Frank is not an employee of a company. He runs his own business, and that business is a single member LLC, a disregarded LLC. So he is a sole proprietor for tax purposes, and he reports everything on Schedule C. So we'll have a look at the net profits from his Schedule C business and how he can calculate some of that earned income credit. Now, we've also got the publication 596 here for the earned income credit. And this is helpful because it contains a lot of rules and worksheets, and it also has the EIC tables where we look up the amount of credit available to us based on our earned income. And then lastly here I've got one slide covering some background on the earned income credit and then more details on the fact pattern that we're going to be looking at in this video. So generally when we think about the earned income credit, it's going to be available to taxpayers that are living and working in the U.S. and they have earned income. Now, there's obviously limitations that come into play there, but generally speaking, what we see is it's going to mostly benefit the lower to middle income taxpayers and those that have children. Now, if you have no dependents, right, so if you have no children, you can still claim the earned income credit, but your income has to be much lower. Now, in order to claim the credit, you need to have what's considered to be earned income. Right, so earned income are wages or self-employment income. So your net amount of self-employment income is counted towards your earned income, and that's what we're going to see in this fact pattern. Now, the overall credit is going to depend not just on your earned income, but how much other income you have. So your investment income, what's your modified AGI, how many qualifying children do you have, if any. So these are all factors that go into play. Now for 2023, if you have no qualifying children, the earned income credit is going to be available to you up to $17,640 of income. When we look at the tables, what you're going to see is that any kind of income after this amount with no qualifying children, you're not going to get any of the credit. All right, now the other elements to meet here, the age test. So you have to be, you as the taxpayer have to be at least 25, but under 65 at the end of the year in order to get this. Now it sounds bizarre, right? Because if you're, let's say you're 23 years old and you're working and you have earned income within these limits, you're not going to get the earned income credit because you're not at least 25. Right, now you also have to meet these other tests here, right? You can't be a dependent of another person, you can't be the qualifying child of another person, and you must meet this residency test, which is that you've lived in the U.S. for more than half of the year. So for those of you that are expats living and working outside the U.S., you're not going to be able to claim this. All right, so let's have a look at the fact pattern, and then we'll get into the return. So Frank, age 28, so he's over 25. Is a single filing taxpayer and he has no qualifying children. He's self-employed during the year, runs an affiliate marketing business, and so his business generates $18,500 in revenue. He has $3,575 in expenses, and so his net profit is $14,925. Now on the investment income side, he has some interest income in his bank account totaling $62. All right, so now when we go through the worksheets, what we're going to find is that he's going to get an earned income credit amount initially of $288, and then the second computation based on his total AGI is going to be $284, and so the earned income credit that you use is the lesser of the two amounts. All right, so let's have a look at tax return for Frank. We'll start at the Schedule C and work our way through here so we can see how all this is calculated. So we've got Frank's Schedule C business here. It's affiliate marketing business. And we can see here the income. So the gross revenue up here, $18,500. He's got the variety of expenses. And so his net profit or loss from the operation is $14,925. Now, once you have the $14,925 available, the next step is to move on to Schedule SE to compute the self-employment tax. So the self-employment taxes, we need two numbers, right? We need to know how much is our total self-employment tax and what is the deductible part of our self-employment tax. And so that's these two values down here. So the total self-employment tax that Frank owes on his net profits is going to be $2,109. And the deduction available for 1/2 of that SE tax is $1,055. Now, once we have those values, then we can start to look at the worksheet for the earned income credit, which is it's a worksheet that's included in the publication and the Form 1040 instructions. So if you need this worksheet, you can look it up within those documents. So we've got two parts to this, right? We've got the earned income credit worksheet, and then we have a schedule or earned income credit worksheet B, right? Now, if you're not self-employed, you can skip over that worksheet B and just use this worksheet. In our case, though, we are self-employed, so we have to complete worksheet B. But if we start with this worksheet, if we look at line 1, it's asking us to input the amount from line 1Z plus any non-taxable combat pay. Well, if we look at Frank's return, 1Z is a total of these items up here, 1A through 1H. Now, if you're an employee, you would have an amount reported on 1A for W-2 wages, but Frank doesn't have any items up here because he is self-employed, right? So that's why line items 1 through 3 are just going to be blank for Frank because he doesn't have anything up there that would apply to him. So moving on to line 4, as it states here, if you were self-employed or you're using Schedule C as a statutory employee, enter the amount from Worksheet B, line 4. So now we have to look at Worksheet B. So Worksheet B is effectively asking us to find our net profit from the business before accounting for taxes and then deduct 1/2 of those self-employment taxes. So we've got the net profit up here, $14,925. That's from Schedule SE Part 1, line 3. And then we have the deductible part of the tax from Schedule SE Part 1, line 13. Right? So we can see up here we've got the $14,925 figure. We've got the line 13 amount for $1,055. And so when we arrive at the net amount here, we have $13,870, which is deemed to be our earned income for purposes of this credit. So we enter the $13,870 there. And now we can look up the amount based on that earned income in the EIC tables. So you have to do this table lookup twice, right? So the first one is look up the amount based on the earned income, and then we look at our overall AGI and look up the EIC amount again, and then you claim the lesser of the two amounts. So if we start with this one up here, the $13,870 figure, the way these tables work, there's two columns. You're looking for the amount of your income within these ranges, and then you move from left to right, looking up your filing status. So are you single, head of household, qualifying surviving spouse, or are you married filing jointly? So the amount of income that we need to find here is $13,870, and we are a single filing taxpayer. So if I scroll on down here, we're looking for $13,870, and we can find it within this range here, $13,850 to $13,900. And we are a single filer, and we have a 0 here for number of qualifying children. So it's the very first column. So if we move from left to right, we are in the 0 column, and that amount for us is $288. So we enter the $288 figure on line 6, and then we move on to line 7. So line 7, we have AGI from line 11 is $13,932. So what went into that figure? The $13,932 on line 11 is reported there, and that total comprises of the interest income. So we had some investment income. We added up the profit from our Schedule C business, and then we had a deduction for that 1/2 of the self-employment tax, right? So the net AGI for us is $13,932. So line 7, $13,932. And now we go back to the tables again and look up that $13,932 amount. So we have $13,932 falls within this range here, $13,900 to $13,950. And the value in column 0 for 0 qualifying children is $284. So we've got the $284 figure, we've got the $288 on the earned income. And so line 9 asks us if we checked yes on line 8, enter the amount from line 6. If we checked no on line 8, enter the smaller of line 6 or line 8. So we check no, so we're going to use the smaller of 6 or line 8. The smaller is going to be line 8, so $284. Now once we have our $284 figure, we can go back to the 1040, page 2, and line 27 is where we report the earned income credit of $284. So effectively for Frank here, the total tax he owes is $2,115. He gets a credit for $284, and so he owes the difference there of $1,915. And there are some penalties being included because he did not make any estimated tax payments throughout the year, so there's the underpayment penalties. Now the note here is important, right? If you have a qualifying child when you're claiming the earned income credit, you need to attach a Schedule EIC. In this case, Frank isn't claiming any qualifying children to increase the amount of his EIC. He's only claiming himself, right? So he has no dependents here. He's just a single filing taxpayer with no qualifying children. And so this is the amount of EIC amount that he has based on those net amounts coming through from his Schedule C. All right, so that covers it for this tutorial. I hope that was helpful. If you have any questions, feel free to leave a comment below, and I look forward to seeing you in the next video. Thank you.